The Bank of England is all set to raise the interest rates next week for the fifth time since December, as the bank thinks that inflation is set to surpass 10% later in 2022 and is likely to keep going. According to a survey conducted by the Bank of England, expectations for inflation over the next 12 months rose to 4.6% in May, the highest in records going back to 1999. Britain is now forecast to have the weakest economy in 2023 among the world's big rich nations. Investors and most economists are predicting a quarter-point rate hike by the Bank of England next Thursday. This would take the bank rate to 1.25%, its highest level since January 2009, when Britain's economy was punctured by the global financial crisis. As per reports, expectations for the British borrowing costs over the next couple of years have risen sharply, and they have jumped again this week as the European Central Bank flagged the rate hikes at its next two meetings, including a possible half percentage point rise in September. Investors are betting on the Bank of England's Monetary Policy Committee doubling bank rate to 2% by September and hitting 3% by March next year. The Bank of England was the first big central bank to start reversing its pandemic stimulus in December, before the US Federal Reserve and others began to move to head off the jump in inflation caused by the reopening of the world economy. This after the coronavirus pandemic and then Russian invasion of Ukraine. But that did not stop the British inflation from hitting a four-year high of 9% in April, almost 5 times the bank's 2% target. Billions of pounds of further support is expected from Sunak later this year. As Prime Minister Boris Johnson fights for his political life after 41% of Conservative Party lawmakers voted to oust him, there is also the risk of an escalation in a post-Brexit trade dispute between Britain and the European Union, which could also fan further inflation.